Hello, everyone. Welcome to the September mortgage recap. My name is Dylan Lange. I'm a branch manager and loan officer at Evergreen Home Loans here in Whatcom County in Bellingham, part of WhatcomHomeLoans.com. I always have to scroll down, show my NMLS numbers so my compliance team doesn't hate me. But as you know, WhatcomHomeLoans.com is my website. Any past videos, any resources that you need, it's a great place to land there. And this month, I want to talk about gosh, we've had a crazy one, right? We've had the Fed meeting where they cut rates by 50 basis points. Mass media is saying mortgage rates are dropping, home buyers are flooding in. It's time to refinance your mortgage. You know me, I love to debunk everything. I love to really just give you guys the transparency that I think everyone deserves in this market. So we've had a busy month. So I want to talk about why and really when to refinance your home loan or lack thereof if you're going to do a cash out refinance. So let's jump into it. So where do I want to start here? So hopefully you'll get this PDF here that will have, the when and why to refinance. I'll have this video. If you're finding this on social media, you can email me and I can send this out to you. And then also, if you're not on the actual email, newsletter here, it's got a lot of great context. It takes me a few hours to do this every month, so hopefully people appreciate it. I always do a little update of my son. We went down to Palm Springs, my wife, son, and there was 14 of us, 7 couples, 5 kids under the age of 2, Cruz being the oldest, and had a great time. But it was, we're watching baby monitors, and you'd sit down at 7 o'clock when the kids go to bed, crack your beverage, and we're all looking at our baby monitors. So it was a funny time. But so see here, when do I refinance my mortgage? This is like the $1 million question. Also, when do I buy or sell my home? That's another $1 million question that we talked about last month. So September 18th, the Fed did a 50 basis point rate cut to the Fed funds rate. Okay. Within like a minute of that happening, I jokingly said I got 7,000 text messages, probably pretty close to that. Hey, did mortgage rates drop 0.5%? No, right? You have to read through these 5 reasons why the Fed funds rate is indirectly tied to mortgage rates. This is going to be very, very important. If you're watching rates, you're waiting to refinance, you're waiting to buy or sell. We have an election coming up. We have another potential rate cut coming from the Fed. Make sure you understand these market movers. And once again, do not expect a major or sharp drop in mortgage rates solely due to a Fed funds rate cut. Okay, here's why. Look at this. This is the national average for mortgage rates, the 30-year fix and the 15-year fix. And I said, don't lick your lips too much because this is typically with a 1 to 2 point buy down, because Fannie and Freddie pull this data from what lenders disclose online, which typically has a buy down. A 1 point buy down is 1% of your loan amount and a one-time closing fee. 2 point buy down would be 2%. Okay, so you see the average 30-year fixed was at 6.09 on September 19th. That was the day after the Fed rate cut. 15-year fixed was low 5s. Look at this today. Up about 0.25% now in rate. So that was, once again, there's been a lot of different economic news. We've got a election coming up. We've got Iran and Israel and there's concerns there with, there's rising oil prices because of that. There's institutional investors pulling out of the stock market because of uncertainty, driving that stuff into the bond market, mortgage-backed securities, which drives the price up, drives mortgage rates up, all the things. You just cannot predict these things. So you got to do your best at the information you've got. I always like to remind people too, there are 13 variables that will dictate your pricing. So when you're talking about when should I refinance, when should I buy, I get this all the time. What's my rate? Well, what's the purchase price? What's the down payment or your equity? What's your FICO score, your credit score? Is it a primary home, second home, investment property? Are you doing a 30-year fix, a 20-year fix, an ARM loan? Is it a single family home? Is it a condo? Is it a manufactured home? Is it a single family home, duplex, triplex, fourplex? Is it a conventional loan, FHA, VA, USDA? Are you doing a purchase, a refi, a cash out refi? Are you waiving escrows, or do you want us to pay your taxes and insurance? Are you a first-time home buyer or not? What's your income? There's different income brackets that gets preferred pricing. And of course, the day that we lock. Number 13 is probably what we're talking about the most, but there are 12 other factors that set your pricing. But really, while you're watching this, when and why to refinance your home. So, mortgage rates are teetering around 8% October 2023, and now they're hovering in the low 6s, high 5s. So you're seeing a 1% drop for clients. It's kind of the general rule of thumb. If you're doing a rate and term refinance, you want to wait for a 1% savings, or if you want to cash out some equity. Home equity lines of credits are 8.5%, 9% right now. So a cash out refinance, I have a lot of clients that own their homes outright, and they would typically do a HELOC, but the cash out refinance rates are just lower, or they want to do a remodel, they want to buy a business, they want to purchase another home. Maybe they're buying their summer home or winter home in Arizona, and those second home rates are higher than primary rates, so they'll do a cash out refi on their primary and buy it cash down there. Paying off higher interest rate debt. The consumer debt in the U.S. is at an all-time high. It's at $17.8 trillion, and the average credit card interest rate is over 20%. So you can see the household debt right here, and mortgage debt is in blue, and household debt is in red. It's inflation, right? It costs more to go to the gas pump, to the grocery store, to whatnot. So people are just incurring a lot of debt. And then shorter term. So I had a client that had a 30-year fixed, bought, last year, and we were able to refinance her to a 15-year fixed. We got her the exact same payment, but she's on a shorter term, so she's going to pay that loan off before she's 45 years old, which is just incredible. So those are the 4 main reasons why to refinance your house. I also want to give a big shout out to the 8 families that purchased or refinanced. So we did 6 purchases, 2 refinances, various reasons for those refinances in the month of September. Now, let me catch my breath. So that's when and why to refinance. Contact me if you have any questions. A reminder too, just because you qualified for the purchase does not mean you will qualify for the refinance. If you've had any drastic changes to credit, income, debt, assets, you went and bought 10 boats, you quit your job, you're on maternity or paternity leave, there's certain things that we need to look at with that. You spent all your money, you lost some money, you remodeled the house, right? All of these things can change your eligibility. Just because you're getting a lower mortgage payment, you're paying a higher one, does not mean you will just qualify for a refinance. So once again, mortgage rates, like I talked about, if we're looking at back in October of last year, they're still looking pretty dang good. But when you're looking right when the Fed cut the rates, we all thought that this trajectory was going to continue going down, and now it's popped up a little bit. Mortgage applications. You can see when the Fed cut the rate, everybody thought mortgage rates were going to go down. A lot of buyers said, oh my gosh, I got to apply, I got to refinance. Some of them are too late. They kind of missed that bottom out. There'll be another bottom, right? It's cyclical. It'll happen. So these are mortgage applications. You can see a huge spike right before the Fed cut, still another one after that, and then you'll see a decline. Why? Because mortgage rates went up. So if you're looking to buy and sell in real estate, when mortgage rates go up, less people are looking to buy homes. Okay? Simple economics there. You'll see mortgage rates we talked about. So 6.125 will cost you 1.9 points. Like I said, the national average, that 1 to 2 point swing, it was in the low 6s. And then internal turn times and appraisal turn times. My biggest thing is get pre-underwritten, get ready to go if you want to buy a home. If wintertime is a great time to buy real estate, that's where you see less buyers out there. If you're a seller, watch my last video last month. I think if you can, wait till spring. Mortgage rate trend is up. Mortgage application trend is up, which is odd because typically it's inverse. But I think with the Fed rate cut, that was an anomaly. So I think that's all I got this month, and I'll catch you on the next month mortgage recap. See ya.